Good morning. You're watching The Market right here on ET now with me, Aisha Faridi, Aman Dabash, Nikunj Dalmia in the studios. And a little bit of a disappointment coming in for our markets yesterday, wherein we did snap the 3-day gaining streak and did close at the session lows. Of course, key heavyweights like Reliance, HDFC Bank, they all continued to be in a drag. And we were in a large trading range. In fact, from the lows of 19,250 to the upper end of 450, in fact, almost touching close to that 500 mark as well in the last 8 trading sessions. And clearly, I mean, from the peak, we've seen quite a bit of these heavies come under pressure, be it a Britannia, BPCL, Bajaj Finserv, Kotak, Asian Banks, Asian Paints, a lot of them, Nikunj.
Aisha, what looked like a tired market, I think now, frankly, things are deteriorating.
Yeah.
And I'm purely speaking in terms of the Nifty here. Nifty has not really managed to muster a strength when you had global tailwinds and you had support of liquidity. So the market surely is getting jammed at higher levels. And for the first time, I would say in the month of August, the real temperament of the market would be tested, because now you got stocks like Reliance, HDFC Bank, ICICI Bank, which are dragging the markets down. So what looked like a market which you wanted to buy on a decline and was showing signs of moving in a range, looks like for the Nifty, the range of our benchmark indices, the range will get challenged. The setting on the table on Thursday, which was yesterday, was quite conducive for Nifty to break out rather than reverse. The Bank Nifty was strong. There was a news flow in Reliance. Global cues were strong and supportive, but markets did not really latch on to a conducive trading setup. In fact, it reversed. So the question which pops up is that for a market which was showing signs of range bound, has the bias now shifted from bullish to bearish? And in the near term, what if Nifty goes below the range? So now you got to genuinely fasten your seat belts and say, you got to prepare yourself for volatility and some more downside. And I'm purely speaking in terms of the Nifty here. Broader market, looking at the exciting things which are happening in the block deals and what's happening to individual stocks, that's a completely it's a completely different kettle of fish. So really, depending on whom you are asking, you will get a different kind of an answer. Now, question is, will the numbness in Sensex and the Nifty benchmark indices, will it hit the broader market, or it will continue, or we will continue to stare at two independent markets? But if I was using the word fatigue for describe the setup,
that's the right word, really.
Yeah. So I think fatigue now has to be interplayed with a marked deterioration in for the global for the bullish for the bulls.
Yeah.
Okay, just a quick roundup as to how the global markets as well wrapped up yesterday's trading session. That Nvidia-led rally that really fizzled out. It was a cut of 1% plus for the most of the markets, and the Nasdaq as well. In fact, saw nearly a 2% cut, and you've seen that the Asian markets seem to be piggybacking on that similar sentiment ahead, of course, of Powell's Jackson Hole speech, and that's going to be clearly in the spotlight. It's an annual gathering, remember, and a lot of cues are watched out for by the rest of the world. It holds a lot of importance this time around as well, largely due to the sticky inflation. There's been rising interest rates as well in a lot of regions. And in the last meeting in the month of August, Powell had actually warned that the US may need to enter a lengthy period of very restrictive monetary policy that, Nikunj, he said, will bring some pain.
Yeah, Jackson Hole is important, and the consideration right now is that you've got a comeback in US economy and a comeback in inflation. So in that context, I think the Jackson Hole is important. And globally also, I think if you frankly look at the setting, which is the 10-year paper, it is now at 4.2. US inflation data, it has not cooled off. US economy certainly is doing much better than what everybody anticipated. So I will not be surprised that from the Jackson Hole, you actually may see a complete indication, hint, acknowledgement that inflation is not going to come to the 2% comfort level, what Fed has been maintaining, and interest rates will remain high for long. The view at the beginning of the year was that interest rates will go up by 25 bips and 50 bips, and towards the second half of this year, US economy will slip into a recession and the Fed will be forced to cut the rates. What may actually happen is that you may not see such a scary outlook or dim outlook on inflation, but you may actually see a clear hint which may come back, which may point to the fact that there is volatility, there are near-term challenges, but given the dynamics, interest rates will always remain high. So that becomes a departure. The departure is that interest rates will not come down, and you'll have to adjust your terminal value and the market valuation to live with this kind of an inflation, which means that is 4% plus 10-year paper now the new normal for a long period of time. Yeah. If that is the new normal, then it will lead to some adjustment, and I think that may just not shock the market, but that may surprise the market.
Yeah, in fact, as we are keeping an eye on that all-important Jackson Hole event, Nikunj, similar has been the commentary from the RBI minutes as well, because the governor is saying that they need to preempt the second round of impact of food price shocks, saying very categorically that our task on inflation is still not over. And that's pretty much the commentary from most MPC members. Jayant Verma saying inflation is well above the tolerance band in the last few months, repo rate high, enough to bring inflation under control. Shashank Bhede saying that impact of policy rate actions is yet to be fully realized. So all of them are back with the inflation swords, if I can use that word.
See, the mandate of Reserve Bank of India is to fight inflation.
Yeah.
And given where food and vegetable inflation has pushed the inflation higher, Reserve Bank of India as of now has just got the guns ready. They are not firing any bullets, or they are not firing any bazookas. I think what the MPC meeting is indicating that there is an acknowledgement that inflation is going to be sticky, and they need to now prepare, or they at least need to start. So the guns were out of the barracks. Now they'll have to load the gun. If vegetable prices and the cyclicality in the if the cyclicality does not come down. So what it means, Aisha, that is more important, is that how would market interpret it? Yeah. Markets would say inflation will remain high. Reserve Bank of India will continue tightening liquidity. Reserve Bank of India will ensure that in the near term, the balance is more towards tightening, not towards loosening. What that means, that in the near term, NBFCs will underperform. Yeah. That means that there would be pressure on some of the rate sensitives. Excepting banks, where I think large part of the underperformance is over, I think NBFCs now run the risk of underperforming. See, Reserve Bank of India is still waiting for vegetable prices to come down. Yeah. And by increasing interest rates, can you bring vegetable prices down? You cannot. Yeah. So what can you do? You can only ensure that the liquidity is tightened. And if you tighten liquidity, which you will have to do as a mandatory measure to bring down inflation, then the cost of capital for NBFCs and other borrowing cost will go higher. So again, unlike what globally we were assuming that rates will come down, in India also rates ain't going to come down, and then markets will have to start factoring in and start working for FY25 assumptions with the current rate environment. Assumptions of a buffer or assumptions of a kicker coming from a rate cut, I think both locally and globally it is out, and it is not small, because you change the template. It's black becomes white and white becomes black. I think that kind of a change in terms of template. The only thing
I think in the near term, and especially going by Michael Patra's commentary, who's pretty much saying the same narrative as you, that recent inflation developments warrant careful assessment. He's saying risks stem from banks' liquidity overhang, and RBI should focus on withdrawal of excess liquidity. ICRR, which they were supposed to review on 8th September, it seems that could be stretched for a longer period.
Yes.
It's conjecture, of course.
No, but they will have to do that, Aisha. Yeah. See, what Reserve Bank of India needs to be seen doing something. Yeah. I mean, they cannot sit on the hand and say, okay, we can't control vegetable prices, so there's nothing we can do. They have to send a strong tone. Exactly. Yeah. They have to do messaging. So it could be theatrics also, but they will have to do something. And what can they do? They are not going to increase rates. They will not suck out liquidity. But all these small incremental measures, which are more signal and all, which are more in terms of signaling, I think that will be done. That's one. But what that means, that signal means that rates will not come down, and NBFCs and select, HFCs and rate sensitives, they will underperform. I think that's my sense.
Okay, that's an eye on the macros. Inflation, as of now, it looks like the ammunition is out, but not yet fired, at least when it comes to the Indian RBI governor. Let's move right on then and talk about the block deal trends, because that has been very interesting. Every morning we've been seeing that ticker flash going with respect to block deals that have been taking place. And take a look at the data. It really speaks for itself. That's what we've seen historically over the past few years. And then pull up FY23 and 24, and you can see a sizable increase as well in the number of block deals. The month of August alone, Nikunj, has seen a number of promoters selling stake.
This is the very unique trend, so to speak. You see, block deals have happened in the past. And historically, Indian promoters, if you look at the history of Indian promoters, unlike global promoters, they have very large ownerships in the companies.
Yeah.
The Tatas on an average own 40% in various Tata group of companies. The Birlas have a very large stake. Jindals have a large stake. Uday Kotak, he had a very large stake. Excepting large professional run outwards like L&T or ICICI Bank, Indian promoters have a very large ownership. So why are they selling? Well, they're selling, they're reducing, they're not selling. So it's not that they are selling 5-7% stake, they are selling, I think they're reducing their stake. That is one trend. B, what is also unique here is that since the size of the capital which funds are pouring into India now is so large that you cannot do some of the transaction from open markets. Indian market, when it comes to some of the mid-cap and semi-large cap stocks, they are not very large. So I think that also is an indication that now funds are getting very selective in terms of what they want to buy, how they want to buy, and what price they want to buy.
But the messaging from a retail investor sometimes, or the key drawdown is that, promoters selling, the stock is going to top out.
So they are not exiting, they're reducing in this case. B, I think I would look at the glass half full approach, which is that there are some big funds who are buying into stocks, and that is a clear indication that big funds, are endorsing it. Like, GQG came into Adani. It was an endorsement which came to it. Capital came into a lot of other stocks. It's an endorsement they came into. Fidelity has been doing some of the block deals. It's an endorsement that big global funds are no longer buying in the open market. And that explains that even though flows have not been bad, the bank Nifty has done nothing. And let's look at that data. Let's look at that data to establish that point, which is the data of the stocks which have fallen from the recent high, which are FI dominated stock. And I think, I'll tell you what, I'll just scan through my screen. Sometimes you don't remember all the data. And there you go. From the recent high, Bajaj Finserv is down 10%, Britannia is down 10%, Kotak Mahindra Bank is down 9%, Asian Paints is down 9%. Typically when FI flows are strong, these are stocks which go higher. Yeah. Because money is coming, but money is not going back into traditional names. And that, I think, is an important trend. How do you read into it? It's a judgment call, Aisha. All I can say is that this is a new factor which is at play. Gone are the days where you would say FIs are buying by HDFC Bank. वो समाना गया. कहते ना ज़माना गया.
HDFC Bank has done actually nothing.
Exactly.
Yeah. Okay, let's also throw focus on all the global commentary actually which is coming in ahead of that all-important Jackson Hole speech of Jerome Powell. Vinny is here with all the global commentary overnight. Vinny?
Absolutely. Good morning. And, let's start with the commentary that we've seen coming in from Peter Schiff. And he's highlighting in terms of the problem that is actually there for the American markets or the US is not from the foreign side, but it's on the domestic front for the country. And it is not even a Russia or a China. It's mainly the federal government and Federal Reserve that need to focus in terms of representing a far greater threat to their individual liberty, prosperity in terms of the constitution as well. And that is something that, he worries about is that the internal problem, the domestic problem that they have in America. Other than that, Lawrence H. Summers spoken about what he's expecting from the Jackson Hole meeting, the Jackson Hole symposium, and especially the Fed Chair Jerome Powell's words that will be coming out in the speech that will be coming out of there. He has 5 things that he's watching out for, and the first one is going to be that, he hopes that the chairman, Jerome Powell, is actually going to be in terms of emphasizing what is credibility is there in terms of the Federal Reserve that enjoys in terms of consequences of reversing the course of taking the resolute action to raise interest rates and not in terms of an argument to afford whether they can in concerns about the inflation. Other than that, he wants to talk about the second point is rejection of other suggestions that inflation is securely under control. The third point he wants to highlight that Chairman Powell should actually highlight is in terms of recognizing the dramatic change in the US fiscal position as well, and that has a major implication in terms of the monetary policy, so that needs to be highlighted as well. Fourth point he wants Jerome Powell to highlight is in terms of the need of an explicit or an implicit growing chorus that the Fed should actually adjust the inflation target, whether he's going to be highlighting any point of adjusting that inflation target which they're not meeting up to. And lastly, in terms of, he wants the Fed chairman to actually remain agnostic in terms of the future path of the policy that one can take as the Federal Reserve as well. Other than that, we have comments coming in from Fed's president, Boston president Susan Collins, who is highlighting that, maybe there's a possibility that they will be taking one more rate hike as well, and they think that overall, extremely likely that they will need to hold the sustainable amount of time, but exactly where the peak is in terms of the interest rate hike, that is not sure, and that is why they may need a rate hike coming in as well one more time. Similar commentary coming in from former Fed President James Bullard, who is saying that the economic activity, the pickup over there this summer, that is seeing a bit of a delay in terms of the plans that the Fed Reserve may take and wrap up the interest rate. Seems a bit of a delay there. So one more rate hike is possible. That's the commentary coming in from two of these people as well.
Much, Vinny, for highlighting all of that commentary coming in from the global commentators. Let's find out what exactly the view is on the index and what are some of the top trading ideas to watch out for. Kunal Bothra is right here with us in our studios, and we've also got Nooresh Merani joining in. Kunal, let's get in a sense from you. Yesterday, we closed close to that low of the trading session, snapping that 3-day gaining streak, and a lot of the heavyweights felt the heat, like RIL and HDFC Bank. What do you make of it?
Morning, Avan. Since the last couple of days have been maintaining a sell on the Nifty because most of the indicators on the chart, specifically on the daily front, they've actually entered into negative territory. So, our analysis generally indicates that indicators are the first ones which tend to give signs of weakness, strength on the indices. And when that happens, we expect the prices to get into a reversal. Now, there are two things which happened yesterday. The Nifty managed to close below the 90,400 mark, which again reinstates the fact that we could be in for correction on the index. The other way to look out for is 19,600, which had been a resistance of sorts. We failed to cross over those levels on the Nifty yesterday. So we opened high. We made a high of I think 19,580, 584 on the Nifty spot, and then we managed to fall 150-60 points on the Nifty to close sub the 19,400 levels. The third and the most important part is the Nifty is now on the verge of breaking its 50-day moving average. This again is a very, very important sign. We've seen historically in 2022 and even prior to that many occasions that when the index has fallen and closed below the 50-day moving average, we've seen additional pressure coming back into the indices. So net would maintain that bearish stance on the Nifty, at least from a very short-term play.
Right, okay. Nooresh, hi, morning. Well, seemed like just a one-day wonder. The recovery Nifty Bank fell again yesterday. What levels are you monitoring here now?
So the Bank Nifty in comparison to Nifty has fallen a lot more from the top. We saw decent enough recovery. It topped out around that 45,000 mark, which was the target in the near term. And from that, we are correcting. 43,500 to 43,800 remains the major trend change level. So for now, today, for the day, 44,200 is what I would be watching out for. Same way on the Nifty, 19,250 to 19,300 is the band. And more importantly, going into next week on Monday, will we see some bit of a trend confirmation after US market reaction today to Jackson Hole. So for now, the view remains if you get stopped out today at 19,300 on the Nifty, go with a lighter position on the index. Wait for a fresh trend from Monday.
Let's get stock specific. So Kunal, you were talking about that bearish stance. In light of that, what is the strategy when you have to get stock specific?
So I'll go with a couple of sell calls as well as one buy. The first one is a buy on IRCTC. The only reason for suggesting a buy over here is that the stock has been a relative outperformer. In the last few days, the stock has crossed above its 200-day moving average, as well as given a breakout in the swing charts above 660 odd mark. So would suggest a buy with a target of 700, stop loss at 640. And the second would be a sell on Lalpath Labs. That stock made a fresh swing lows on the charts, closed below the 50-day moving average. Sell with a target of 2160, stop loss at 2235.
Right. Nooresh, what stocks are you betting on this morning?
Focusing on the leaders, first is a buy on Indian hotels. We've seen the whole hotel sector make another leg up. We've seen Lemon Tree move up, EIH move up. Indian hotels also made a new 52-week high. The stock for the last few sessions was in a tight range for the last almost 2-3 months, between 380 to 405. We managed to just cross above that day before. Overall, looks like a flag breakout in the making, expecting it to break above 405, sustain there and go towards 450. Stop loss to be kept at 385. Second is a buy on IndusInd Bank, which is an interesting chart. The stock gave a flag breakout yesterday. And over the last 2 to 4 weeks, the tops are around 1430 to 1435 levels. If that breaks out, it would be a fresh breakout. And also the stock has been in a strong uptrend ever since it broke out above the 1250, 1300 mark. Out here, expecting a steady move towards 1600 and a re-rating candidate in the banking space could take leadership move going forward.
Tells IndusInd Bank, that's what Nooresh is picking out. IRCTC was a buy from Kunal with a sell on Dr. Lal. Let's move right on then, and Sumit's right here with us in the studio as we delve deep into some stocks and discuss the outlook. And let's start with Midcap IT, Coforge. We do know the stake sale by Barring PE, and Jeffrey says that removes a key overhang, and then there's also Birlasoft.
Well, yes, that 13.5% stake of Bearing PE was an overhang on this company because they were expected to sell the stake, and that has happened. But from the company's perspective, if you see, it was anyways a professionally run company. The revenue growth outlook that they had given was industry leading at around 13 to 16%. They were also expecting their margins to remain largely stable. Now, despite the run up, Jefferies is quite bullish on the stock. They're expecting the premium valuations to sustain even going forward on the back of the industry leading revenue growth targets that they have, which Jefferies always think it is quite achievable by the company, and hence they have also upgraded the target price for Coforge yesterday by around 2,000 odd rupees. From 4,000 they had lifted the target price to close to 6,250, and that was the main reason why we had seen such kind of an up move in the share prices yesterday, around 9 odd % up move that we had seen in the share prices. So do you expect the run up that we are seeing in the mid-cap IT space to sustain with, and also Birlasoft, there's a initiating coverage note?
I think Nomura has come up with something,
Yeah.
and they're talking about the fact that, look, the business is not all that bad. There's another note, I think, from Emphasis with one of the brokerages where they're expecting sequentially, I think it's Citi, which talks about, we hosted Manish Drogar, CFO, for investor meetings in Singapore, and the key takeaway is that Emphasis will likely come back to quarter-on-quarter growth in Q2. What's the point here? The point here is that not everything in IT is good, not everything in IT is bad. I think it's time to focus on what not everything in IT is bad. IT was a universal sell in 2022, and it is not a universal avoid in 2023. So rather than focusing on what is bad in IT, I think focus on what is good in IT. And that's where I think, let's say a name like Coforge, or I'm not so sure of Emphasis because in my book they'll have to demonstrate, pitch more before I get convinced. But I think Coforge, or for that matter Birlasoft or Persistent, some of these companies are showing unique ability to charter their own course, and they're not really so much getting affected with this entire AI plus the slowdown at a macro level of what is happening. And I think that is where the differentiated part is kicking in. So what you may actually see is that the IT space now is going to be split right in the middle. For 2021, mid-cap IT did exceedingly better than large-cap IT, but the P multiples, they just went out of whack. That realization has kicked in. Now everybody is realizing that US economy is not doing all that bad. Valuations, you can argue that they are not very cheap, but I think the growth is not going to be punctured. There was to be a time when Infosys represented the entire sector. Then came a time when large-cap IT represented the entire sector. I think now is the phase where IT is not a universal sell, but focus on what is good in IT. That is where I think the puck is going to move.
Okay, be selective when it comes to IT, but let's find out what the outlook is on Paytm as well. And yes, indeed, you did have that news coming in with respect to the block deal, and sources indicating that Anfin is going to sell shares.
Well, yes, we could also say that the block deal has come in a bit sooner than what the street was expecting, given the fact that recently they had shifted the 10.3% stake that Anfin had directly in Paytm to a VSS-owned private entity. But do remember that Anfin still owns that owns a part of that VSS-owned entity. So indirectly, they're still holding a stake in Paytm. Now, this block deal is of around 3.6% equity at a discount of around 2.7% to yesterday's closing. So we could see some bit of a pressure on the share prices. But what we are hearing from the market is that there is a strong demand coming in for Paytm. If you remember, a few days back, Bernstein also came out with a bullish note on Paytm, where they had kept a target price of around 1,000 odd rupees for the company. And after the stake sale, Anfin will still own 13.5%. So this overhang would remain on the share price. And we could see some rub-off effect on Zomato as well today, because they own 10% in Zomato as well.
So you got to ask yourself is that, Vijay Shekhar Sharma has already, in a sense, taken 10% ownership in Paytm. So that 10% ownership of Ant Financial has already been diluted in the company. But are they in a real hurry? Because in less than 15 days, 10% plus 3, that's 13. And the remaining 13 is left. So is Ant Financial in a hurry? Or is there a compulsion that they are now ready to really reduce the ownership in a very very aggressive manner. Because in a matter of 1 month, if 13-14% of your ownership is down, that means you're in real hurry to to exit. If that is the case, could this just be a beginning of series of blocks where Ant Financial is looking at offloading? Now Paytm is no longer a beaten down stock. It's gone to about 900 rupees. At 900 rupees at the current market cap, it's priced to perfection. Now it's going to be growth rather than re-rating. So if the supply continues, could that really be the overhang for the stock in the near term? If this kind of selling in the open market continues, which the trend seems to be, could that really be the overhang? To be very fair and frank, the condition is not that damaging what it was, let's say 6 months ago at the beginning of the year when some of the P investors were selling, the price was getting smashed. They were selling without thinking. Now they're planning and they're selling. But planning means that have they planned to sell more? See, Jan, they were not planning and selling. Becho niklo. Now they've planned it. That entire Vijay Shekhar Sharma taking his stake higher, 3% block deal, maybe more is coming. But planning means supply will also increase. I don't know. So that I think will become an overhang now.
Yeah, that's going to be a key stock to look out for. Okay, we'll take a very quick break. Samit, thanks for highlighting all the stocks that you need to keep on your radar this Friday morning. But Rahul Shadda says that banks are very much in a sweet spot and still looking at the valuations, the price to book that they're currently quoting at, some of them are still very attractive and undervalued. Hear out his opinion.
I think things are on control. We've had strong execution on the infrastructure projects. The GST collections have been fairly robust. So somewhere that kind of provides a flow to the growth, that provides a flow to the market in this period of uncertainty. From corporate India, I think the feedback's been mixed. Banks is as good as ever. There are pockets which are doing exceedingly well, hotels, travel, etc. But consumption, particularly from retail perspective, is weak, and nobody is able to point a finger at what is the reason. Is it that the consumer is in shell because of inflation, etc.? But yeah, consumption's been a bit weaker.
But if that is the case, then why the banks are showing growth in the retail book?
So I think this is a question we all are asking. Is it unsecured loans? And to be fair, if you ask me what worries me, is this growth in unsecured loans over the last 5-7 years. And now everybody is kind of complacent about it. So one thing which would worry me about banks, and this is a space we've liked, is, look, are we going to see some of the delinquencies come through in unsecured loans? There seems to be a kind of a complacent attitude about it. We've seen RBI also come and talk about it. Hopefully regulators tighten more norms on this.
It's been quite a deviation from the pharma space with what we saw during COVID time, pre-COVID, etc. What's the outlook currently on pharma, particularly with the expensive valuations?
So if you see pharma space, the rally happened from late May, June, when there was this buzz that, look, pricing in US has improved. One thing which we guys have to watch out for over the next 6-9 months is the strong deflationary impulse coming from China. See, demand's kind of been very weak post this reopening. We've seen renminbi come under pressure as China writes a blank check for the property developers, local governments, etc. And our belief is that renminbi further weakens from here. As renminbi weakens from here, the Chinese corporates see less demand at home. A lot of that material is going to come in the export markets. So pharma story looks good for next couple of quarters, but beyond that, I would be watchful. More.
Welcome back. Lots of stocks to watch out for in today's trading session. Let's begin with fresh brokerage notes this morning. And Jefferies has come out with their view on KFin Tech with a buy rating. Nomura has initiated coverage on Bajaj Finance as well as Birla Soft. Let's take it across to Vamakshi, who joins in with all those brokerage calls. Vamakshi?
Well, yes, a whole host of counters and focus on the back of several brokerage notes. Let's first look at Birla Soft. We have a brokerage note coming in from Nomura. Largely what they have highlighted is that the ongoing organization changes is expected to drive stability as well as revenue growth for Birla Soft. The company has made significant improvement in its business metrics over the years, and in fact they're expecting clarity to come in as far as the revenue target of nearly $1 billion is concerned. They're expecting Birla Soft to head towards industry-leading growth in the medium term. So given all these positive factors, we have have Nomura initiating coverage on Birlasoft with a buy rating, target price of 610 rupees per share. Other than that, we also have KFin Tech in focus. We have a note coming in from Jefferies. They have highlighted is that the domestic opportunity for the company rides on financialization of savings as well as the company's growing share, international as well as alternative segments and new growth engines for this company. And in fact, the company has posted healthy growth in profits as well as cash flows. So given all these positive factors, we have Jefferies initiating coverage on KFin Tech with a buy rating and a target price of 500 rupees per share. And lastly, let's also watch out for Bajaj Finance. We have a brokerage note coming in from Nomura. They have highlighted that the company has consistently delivered very strong numbers. The execution especially is coming in for the new segments will be an important factor to watch out for. The company does have well diversified liabilities, and in fact the exit of HDFC Limited is a positive for Bajaj Finance. There are some fears concerning Jio Financial Services entry, but they have highlighted that these concerns are overdone, and in fact things are expected to play out in the medium term. They're seeing some very strong near-term tailwinds. The valuation premium for this counter are expected to sustain, and given all these factors, Nomura has initiated coverage on Bajaj Finance with a buy rating, target price of 8,700 rupees per share.
Okay, we'll leave it at that, Vamakshi. In fact, Nuvama has released a note on Sirma SGS as well as Alchem Laboratories as well, and the management meet takeaways. Vinny is here to walk us through both those notes. Vinny?
Absolutely. So the key takeaways that we're getting in from the management meet that Nuvama had with Sirma SGS and Alchem. Let's talk about Sirma SGS first. What the highlight is coming in, the long-term aspiration for the company is to become a $1 billion in terms of revenue. That's a 25% return on capital employed, and 25% they're expecting from the ODM business, and a third of the business will be from the exports is what the company has highlighted. Now, obviously, they've spoken about a guidance of a double-digit EBITDA margin that is still intact for the company. Capacity expansion, which is in Chennai as well as Hisar, is on track, is the company highlighting that. And recent acquisition of Zuari Digital bumps up the Sirma's ODM quotient as well. And in its healthcare segment, specifically where the business, where the acquisition which they've made, the company is working on that healthcare segment as well. So that is going to bump up their business further over there. Other than that, they are focusing beyond that immediate impact, and research and development in subsidiary is something that they have carved out as well. Let's move on, talk about Alchem Labs. Now, Alchem Labs has highlighted that they are expecting a high single-digit growth in India, given the muted Q1 and Q2 being contingent on the monsoon. So, yes, after that, they're expecting a high single-digit growth in India. Chronic gaining traction for the company, as well as they're looking for it to double in the next 3 years, as well as rationalizing in the US R&D spends at 8 filings per year is expected to be a single-digit growth as well. US price erosion has dropped to high single-digit for the company, and that needs to see some sustainability. That's a factor that one should watch out for Alchem Labs as well. And 16% EBITDA margin in FY24 is what they're expecting on the back of softening RM cross, price hikes in India, and lower marketing spends in the coming quarters will keep that sustained 16% EBITDA margin is what they're aiming at for FY24.
All right, thanks very much for giving us those details. Let's connect with Hemang Jani as well, who's joining in on the show. Hi there, Hemang. Let's start off by getting in your take on the mid-cap IT space in particular. Given that now, for example, for Coforge, you've got the stake sale by Baring PE really removing a key overhang. Do you think that we should now start focusing on the positives like deal wins, industry-leading growth, etc. for mid-cap IT? And what's your, where is it that your preference lies?
Morning. Midcap IT has been doing reasonably well, though it's been a bit of a stock-specific move, and we've seen good, strong performance come through from Persistent System, Coforge, KPIT, Emphasis. These stocks have done reasonably well, and even the quarterly numbers, some of these companies have delivered, a good, solid performance with a good growth outlook as well. What we must bear in mind is that yesterday US markets, gave up in a major way, and Nvidia, though they delivered exceptionally good growth and much better outlook, the fact of the matter is that the stock was down from the high almost about 5 to 6%. So short term, there is going to be an overhang of what really happens in US market. So I would, feel that one should really wait for a bit of a clarity and stability in the stocks before you really start getting into some of these mid-cap IT names.
That's going to be the other one which is in focus. Of course, the stock has done pretty well year to date. But remember, Anfin is looking to sell a 3.6% stake amounting to about 2.275 crore shares, that is, in the market. Hemang, in the near term, some of these promoter exit or PE exits, what are they likely to do? Case in point being Paytm on the stock price, and how should minority shareholders be reading into this news?
There are two aspects to this. One is that once you have series of block deals, it takes away the liquidity from the market, and which is not great news given the fact that markets are already struggling, and if a sizable liquidity is sucked out, it will have some negative implications. Other thing is that you have to take a stock specific view. Case in point being that Coforge, they offer almost about 7% of the equity at a discount, and we all saw what really happened. So I think it all depends upon what kind of buying interest is there, and how soon that block gets absorbed in the system. So I think given the overall structure of the market, it would make more sense to kind of stay away from having large commitments and take a stock specific view basis the level at which one is comfortable entering into.
Okay, let's move on and let's address some of the other stocks which are going to be in focus. In keeping with management meets, Citi has released notes on their meetings with Emphasis as well as Aptus Value too. Lisa is here with the takeaways. Lisa?
Well, yes, Citi Conference, they met up with the management of Emphasis as well as Aptus Value. So let's look at the important management key takeaways from Emphasis first. The management highlighted that they will be seeing sequential growth in Q2, and they also highlighted that further growth is expected in Q3 as well as Q4. So growth is expected to improve from then onwards, and EBIT margin that is likely to remain in the narrow range, where guidance is expected to remain unchanged at 15.25% to 16.25%, and this will be through the remaining quarters of FY24. Now moving on to Aptus Value, the management said that levers are available for growth of 30%, and that includes branch expansion, which is gathering pace in regions such as Maharashtra, Telangana as well as Karnataka. But OPEX to assets, that is expected to inch up a tad bit further. And management also sounded off getting 30 plus DPD down to 5%, and they expect the credit cost to be around 25 bips. So these are the important management key takeaways from Emphasis as well as Aptus Value, which is highlighted in Citi conference.
All right, thanks very much for highlighting those details, Lisa. Let's get right back then, Hemang, and get in your outlook on what the view is on Paytm post, and after that news flow. And just wanted to understand, Hemang, what the outlook is in general on new age tech companies. Will you be very selective within this space, as we have seen now a lot of focus on profitability improving?
So, Avan, what we've seen is that Paytm as well as Zomato, maybe Nykaa hasn't really done so well. PB Fintech also has kind of bounced back. I think from the lows, these new age tech companies have seen upside of almost about 30-40%, but it's quite sizable, as the market cap even at this price point is not small. Now, having seen that kind of an up move, the fact of the matter is that Paytm and Zomato continues to deliver better than expected kind of, numbers, data points. So one is getting a bit of a comfort in terms of where the company is heading towards in terms of profitability and growth. So that is surely comforting. The only thing is that having seen a big run up, it would make more sense to wait for a 10-15% kind of a dip before buying into it. So I would definitely be positive on names like Zomato, as well as Paytm, but would wait for a small dip.
Hemang, you're curious to get in your thoughts on the entire defense and railway sector. Some of these stocks have seen a pretty phenomenal rally over the last 6 months or so. Is all the good news already priced in, or is there more steam to go?
Clearly, the theme is very strong, and the good part is that the positive news flow in terms of orders, in terms of the government's focus, continues to remain good. which is surely good. And I think both Bharat Electronics and HAL, I think these are the two names where we have a lot of comfort in terms of the overall growth for next, let's say, 2 to 3 years. And I think given the current geopolitical situation where we have continuous threats coming from China, I think this is going to be a focus area for everyone. So I think BEL and HAL are the two names that we like.
Hemang, what's stalling big banks like HDFC Bank? I mean, the merger is done. The news flow is now positive. It's one combined large entity, but the stock price is just not doing anything.
Aisha, a couple of points. One is that though the merger has been positive news for the overall market, the buying, which was likely because of the weight change, is much lower than what the market expected, maybe less than $1 or $2 billion. Secondly, there are also reports and concerns that on a larger base, it would be far more difficult for the merged entity to deliver a 16, 18, 20% kind of a growth, as we already have seen that the bank is actually struggling to deliver, larger growth on this base. Plus, the integration related issues will have some bearing. Maybe it will take a year or so to really complete that. So I think the market is slightly cautious on that. And at the moment, I think it would make more sense to go with the ICICI Bank or an Axis Bank versus an HDFC Bank, as there the growth visibility is much better.
In fact, since we're on the subject of HDFC Bank, recently a bullish note from Macquarie said that HDFC Bank and Elephant can definitely dance. This comes amid optimism that the management can double the balance sheet in about 4 to 5 years' time, and of course other triggers as well which are at play. So let me take it across to Harsh, find out what's Macquarie's case on HDFC Bank.
The key piece here is with regard to how brokerages are really looking at HDFC Bank. In fact, within the Bank Nifty, HDFC Bank has the highest relative return, average return, which analysts on the street are expecting at 28%. So can the elephant really dance? We've tried to break up the metrics of this one to try and first understand where loan growth will come from. 4 to 5 years is what HDFC Bank is expecting to double their book in. We've tried to combine both books of HDFC Limited and HDFC Bank over the last 5 years. HDFC Limited plus Bank has been able to grow at nearly 17%, while HDFC Bank has been able to grow at 20%, and HDFC Limited has grown at 12% CAGR over the last 5 years. Where will the growth come from? Well, fresh branches. What they are continuing to do is add branches, 1,500 odd branches to be added every year till FY26. They've already added 1,479 branches in FY23. It looks like they are well on course for that. The net interest margins are expected to dip from the current 4.3% margin to 3.8%, and that's the current guidance that they've given. Of course, a lower risk book means that there will be a margin depreciation, so expect that, but they've largely met guidance, most times over the last 5 years. With regard to OPEX, very efficient bank. They've been able to keep their OPEX ratios in check. Cost to income has been below the 40% mark, though it did rise a bit to 40% in this year due to the branches added, but expected to dip back to 37% by FY24 again and deteriorate from there. We're expecting to see ROAs therefore and profitability currently around the 1.8 to 2% band, expected to rise to 2.1%, which is probably best in class in any case. Let's look at valuations versus the 5-year average. Now, HDFC Bank's valuation versus 5-year average largely is lower because you have HDFC Limited as well, and we fully appreciate that. But let's look at all the others as well. You're seeing ICICI Bank, Kotak Bank also trade well below their 5-year averages, even though Kotak and HDFC Bank by far look the most attractive when it comes to comparing to their 5-year averages. So definitely a case there for HDFC Bank.
Thanks for putting those details into perspective, Harsh. Let's move on then and focus in on power grid, because that's on the editor's radar today. And Nikunj, we have been discussing the power sector as a whole. And given the overall valuation picture, the positive notes that have been coming in and a lot of triggers, what's the view on power grid?
Siavan, why has power grid popped up on our radar? We're taking a leaf from the Morgan Stanley report. Let's start with that. And Morgan Stanley has overweight on it. Now, a stock like Power Grid typically does well when the market are moving towards a defensive bias, and I will not be surprised given the levels and the valuation setup and the global setup that it makes sense to have some defensive exposure to your portfolio. See, simply looking at the Power Grid, and we all know that the entire space in the power sector is charged up right now, starting from transmission to utilities to capex providers. Just about everything in the power space is on a high voltage right now. I think Power Grid has underperformed. The construct of the lay of the land for Power Grid is quite supportive, given that the nodal agencies right now looking at increasing the transmission capacity. So the big picture argument is strong. Valuations are attractive. Price to book is reasonable. The stock has underperformed, and I somehow feel, and I would like to endorse what Morgan Stanley seems to be indicating, that this entire power regulatory tariff, which is just a draft paper right now, markets feel that if implemented, it will have negative implications for the transmission companies. But as of now, that's just a discussion paper. Nothing has come out of it. So put all these factors together, and then you say that if everything in the power space is up, and if the tiny toons are right now doing Kathak and Bhangra, then why power? Yeah, I mean, it's like it is a defensive stock. You look at just about everything in the power space, especially the transmission space, is just on a different kind of tear. I think Power Grid is an institutional dominated stock, reasonable valuation, good big picture. The fear of this regulatory change, I think, is overdone. I will not be surprised that the stock from here starts outperforming for the rest of the year.
Do a breakdance or more Kathak
Exactly.
and Bhangra. Okay, that's the view, Aisha, coming in on Power Grid.
Okay, let's see which way it dances or which kind of dance it actually does. But Hemang, what is it that you're betting on when it comes to the power sector, and also some of the exuberance which is building on to some very small, illiquid, single-digit names within the power sector as well? I mean, not everything can be good out there, right?
I think, Aisha, what we must keep in mind is that the broader market, the mid-cap and the small cap, clearly there is a sign of a fatigue, and typically people end up holding on to many of these names which are low quality, illiquid names also. And before you realize, the stocks are down 10-15%. So I think surely it requires some degree of caution at this point of time. Having said that, talking about the power space, I think the fact of the matter is that within the broader PSU theme, power has also emerged as a sector where people are expecting a good amount of stable growth with additional trigger coming in from reforms. Also, MSCI related, flows were also expected in names like REC, PFC, etc., which have led to some sort of action. So I think NTPC, Power Grid, these are the two names which are a little, sitting ducks, which have really not gone up in a big way. But last 6 to 8 months, they've seen a good amount of action. And given the stable growth and dividend yield that they offer, I think it makes sense to have some exposure to these names.
The implied, excuse me, the implied Nifty is indicating that we are in for a 100-point gap down. So Kunal, is this that moment where the bulls would say it's time to give up? 19,300 looks like decisively has been broken. The range on the lower side is drifting lower. What looked like a market which was in a range, the fatigue factor had kicked in. Now the word range needs to be replaced with downward bias, and fatigue needs to be replaced with deterioration.
Well, yes, Nikunj, I would agree. So many factors have changed in on the charts for the indices. So we always have this typical feature which you look out for, that every trend in the market has a certain set of a behavior. All we have to try and gauge is that what is the kind of behavior in terms of charts. And once that behavior changes its a kind of stance, that's where we expect the trends to reverse on the indices. So what actually happened was, from the March end lows, the Nifty in the last 4 or 5 months of the market rally till July mid managed to protect its 20-day moving average with a very steady kind of a margin. So every minor correction which had happened in the last 4-5 months of this rally, the Nifty protected its 20-day moving average, and then it bounced back to make a new high. But this time around, from 20th of July till so far, what we've seen is that when the index had broken below the 20 DMA, we've actually seen this acting as a resistance for the index. So that's the first sign of change of trend for the index, where a 20-day moving average, which is acting as a major support, is now acting as a major resistance. In fact, even yesterday, the Nifty had a touch and go movement towards the 20-day moving average on the upside. We failed to cross over close about those levels, and then from there we succumbed to selling pressure. The second way to look out for is that we've been highlighting that the premium for the index has dropped down significantly. So we were at a point, I think 2 days back, when the index futures went to a discount, and that generally is very rare kind of a phenomena for the index futures, and that indicates that there have been more short pile up or short built up on the indices, and there's plethora of other technical factors which indicate that we are already at a point of a change of trend. It says that the markets are sending confirmation every now and then. We could probably be getting into a drag. I would expect now the Nifty to even come back towards 19,000 mark, possibly in the next 1 to 2 weeks.
Capital goods, let's bring up that pack up for you, the likes of an L&T, Bharat Electronics, Voltas, Blue Star. Jefferies has come out with a recent note saying that L&T's EPC as well as PE and the core FY25 estimates is currently at an 11% premium to the FY03 10 average. Bharat Electronics as well, they say, is at a premium, but the theme is fundamentally more attractive. Voltas, Blue Star, they say that the premium has some business mix change angle also. They're saying that they remain concerned on Cummins margin pressure, and they maintain that infra plus industrial capex should see a 16% CAGR in FY23 to 26 on an estimated basis versus a 6% in FY11 to 20. The top picks remain L&T, Siemens, Thermax as well as KEI Industries, which has had a series of order wins as well of late. Nooresh, if I could just come to you on some of the charts. L&T, of course, the strongest of them all. Siemens, which had a very good, I think 1 odd day this week. And then Thermax and KEI as well.
So L&T continues to be the most interesting name, given that the trend has now finally formed up. We saw a candle yesterday which indicates a short-term top in place, but a dip back to 2600 odd levels would be a buying opportunity. So looks interesting. The longer term trends are still positive. So for now, some bit of a dip after a move of almost 10-15% over the last 1 month. Thermax is the next one which looks the most promising because the stock has yet not crossed the highs made in 2022. That was the resistance 2700, went down to sub 2000 levels, again came back to 2600, went to 2200. Again came back to 2700, and now we are seeing the pause over here. So technically the best looking chart right now in the capital goods space out of all these names is Thermax. The next one is Bharat Electronics, which looks interesting for the fact that the stock has given a fresh 52-week high. And what has happened to the rest of the defense name, it's not made a similar move. So BL looks promising on dips to 128, 132 levels, wherein slowly and steadily could go towards 150.
The star yesterday was GMR airports. Everybody is flying. Delhi has now, 4 runways, Aisha? 3. They've added 1 more runway, right?
Yeah,
They've added one more runway.
yeah.
3 or 4. Let me Google it up. These days you have to sometimes use Google on air also. Hang on.
Yeah, but can't take away from the strength that GMR Airports saw in trade yesterday. What a fabulous move, a 10% uptick coming in there. And Kunal, was not very 4th runway from September is what they're going to open, and September is just 5 odd days away.
Just think about it. Now, if you have 4 runways there, and at a time when Air India and Indigo are looking at expanding their capacity, we are looking at about 1,000 planes coming into India. And those 1,000 planes have to be parked somewhere. And those 1,000 planes, in a sense, will now soon making, destinations as their, airports as the major destinations. For example, globally, Frankfurt is an airport which is a major destination for a lot of European airlines. Dubai is an airport which is a major destination for, major airlines. Could Delhi be that next destination where it may just end up becoming the major destination for India? If that is the case, then a airport like GMR or a company like GMR would benefit disproportionately because there is more activity, and more activity means more business. It's very simple. B, the airline traffic in India is growing.
Yeah.
I mean, you are seeing a definite migration where you want to prefer time over price. And if time over price, if that phenomenon continues, I guess the air traffic in India will only increase. So is GMR Airport one of those long haul stocks you would say, just like you wanted to bet on India's per capita by buying into consumption? Could GMR airports be that play on consumption? Hemang, I know I'm using a lot of superlatives to describe this big picture scenario, but there is a sense of realism. I mean, I'm simply saying what has happened globally.
Yeah, Nikunj, I agree with what you're saying that there is definitely a lot of potential that some of these airport assets offer, particularly the metro ones, given the way the traffic has grown, given the way the airlines have expanded, and still the penetration levels are so low. I think let's address the core issue. What was the issue with GMR? GMR always had this potential and key airport assets, but they had a huge debt. I can see that the debt on their balance sheet was almost about 32,000 crore when the market cap is about 38,000 crore. Now, if the company manages to raise funds like how they did in the recent QIP and bring down the debt, and if there is a certain degree of operational improvement, surely people would want to look at some of these companies. And I do think that GMR, Adani, these names have a great amount of buying interest from the funds who have higher appetite and the HNIs who are looking for some allocation in these kind of sectors.
Kunal, on the charts, GMR airports.
Well, I think it's a bit of a stretch, Nikunj, at current levels. The RSI is almost at 90 for GMR airports on the daily charts, and that's by any means is not a zone where we look to buy the stock, because the risk reward is less than 1:1. In fact, it's 1:0.5 in many cases. So even though the stock is in the thick of very high momentum, the volumes are participating, but it's a matter of reversal which or froth which tends to develop into these kind of zones. We wait for a significant reversal. So even a 3-day reversal, for example, for GMR airports could make the stock come back towards 56, 57 levels, which could be a steep 7-8 point correction. That's a more than a 10% correction for the stock price. So I'll wait for a sizable correction over here.
Give me 3 stocks, Kunal, where the RSIs are looking stretched. It's like saying that if you have elastic, you keep on stretching it, what
till
will
the
happen?
last mile, till it snaps.
It'll snap. Where are we reaching that factor? Where are we reaching this kind of an overbought, extremely overbought zone?
So I'll need to do it for the small cap names, the 2-digit stocks.
Large stocks, which come to your mind?
Nothing else. Escorts is one of them.
Okay.
That stock I think is at 2,900. The RSI again over there is 88 plus for Escorts on the daily charts. I'll again need to see.
Okay, we shall come back to you. Nooresh, in a similar, with the similar spirit, where do you think charts are just haywire? I mean, these stocks have become Humpty Dumpty. You need to avoid them because if you're buying them now, you're going for the last hurrah.
So the few places where there has been euphoria, one has been defense names, whether it is small cap or large cap names. Defense and shipyard both coming into that place. So that is where some of the stocks, for example, HAL has moved really well over the last 1 month, 3 months, 1 year. And second is the EMS space, which is where we've seen a lot of new listing companies make very large moves. So that's the only space where we are seeing a lot more action as well as a lot of news going around it. So those are the 2 spaces where there has been craziness.
Just wanted to get in your take on the entire hotel and hospitality space. Yesterday, in fact, we were chatting with Rahul Chadda and he says that he believes that this is a sector that's garnering traction. Just a short while ago, Nikunj was talking to you about travel picking up and airports, and just sort of linked to this theme, is there still promise in picking up names within this space?
Yeah, I think travel and hospitality has done pretty well in the last 1.5 year. And maybe there was a sense that a large part of that positive is already priced in, and what sort of growth on a higher base these companies can deliver. But on the recent insights which we have got, there is a sense that some of these companies have actually carried out some sort of a expansion, and their hotel room capacity has got added, particularly Indian hotels in Lemon Tree. And given the occupancy levels and the tariff at which they are offering these rooms, there is going to be a decent growth that one can expect for next year also. So I think both Indian hotels and Lemon Tree, I think, are making a lot of sense at this point of time.
Okay. Couple of other real estate names have done well, and especially from I mean, DLF yesterday had a decent session. DB Realty seems to be moving higher. Prestige has been an exceptional outperformer. That's 1 month. DB Realty, 100%, 100% in 1 month. You track this one? DB Realty?
Yeah, I do track that. So again, I think a frothy move coming over here, Nikunj. The RSI is 88 for DB Realty. It's not that the RSI has been suddenly overbought, but then the prices in the last 1 week, 2 weeks have been extremely high. I think that's the problem with the markets. This is what I was highlighting yesterday evening as well, that there are many 2-digit stocks which are actually now getting into that frothy zone where the RSIs are above the comfort level. So these stocks may continue to hold up higher. For the ones who've been buying the stock or have been holding the stock from low levels, they may continue to hold on, but it's always prudent to have a trailing stop loss over here and not to venture into these stocks on a delivery basis. The only problem which happens with many portfolios I've seen, that when the market actually goes into a correction, you are left stranded with such kind of stocks at extreme overbought indicators, and then you expect that this momentum would just continue non-stop for these stocks. That's just not possible.
Just going by this morning's view on Bajaj Finserv, the report from Nomura talking about how the valuation premium will sustain. They've got a buy rating. 8,700 is the target price. Hemang, just curious to get in your take on Bajaj Finance and Bajaj Finserv.
So see, Bajaj Finance and Bajaj Finserv are actually, part of certain indices also. So, the fact that we had this disruption coming in from Jio Financial Services listing and possible disruption or de-rating that can happen, I think a large part of that is over. If you look at the quarterly numbers, Bajaj Finance continues to deliver very healthy growth in the assets and most of the parameters. So I think it may not really outperform in a big way, but for those investors who are looking for a stable, let's say 18-20% kind of a return, I think even at this price point or valuations, it is surely one stock to have. But if it comes to, growth, etc., I think I would rather go with some of the other banks, something like maybe Axis Bank or ICICI Bank would offer you much better growth because the valuation comfort is much higher over there.
Options and a Bajaj Finserv as well in this last 1 month has fallen about 11% or so. Thanks very much, Hemang, for joining in and sharing with us your outlook on the markets. 9 bang on the clock. What are the pre-open rates indicating this Friday morning? Do remember, we've been given a very tempered handover from Wall Street as well as the Asian markets. So no surprises then to see that tick of green on the Sensex, and the Nifty is just about holding on to the green by the skin of its teeth. Let's find out those mid-cap strategies as well from our chartists. And Kunal, what's the top mid-cap trade?
I'll go with the sell on India Cement. That's a stock which gave a breakdown on the charts. Confirmation coming from the RSI on the daily charts. The stock breaking below the 235 barrier, 238 barrier on the short-term charts. So would suggest the sell to 29 as an intraday target or maybe a 1 to 2 day target. Stop loss at 240.
All right, and let's get in your top trade then. Nooresh, what is it that you're betting on?
So that would be a buy on Federal Bank. The stock has given a structural breakout. The stock has been sideways for the last 8 to 9 months. Multiple bottoms made at 120. The short-term range breakout done about 135, 138 levels. Also, the previous 52-week high and all-time high almost got crossed yesterday. So a structural breakout. The stock used to be 120 back in 2018. That breakout and a consolidation done. So it looks like a slow and steady move towards 165. Stop loss to be kept at 135.
Okay, let's move right on then, and here are some of the other top stories that we're tracking outside of the world of markets. The Russian President Vladimir Putin broke his silence on the death of Wagner chief Prigozhin, stating that an investigation would take place into what has happened to the private jet that carried 10 people departing from Moscow to St. Petersburg. Meanwhile, he also described Prigozhin as a talented businessman with a complicated fate who made serious mistakes in his life. In other news, the former US President Donald Trump has surrendered on charges of conspiring to overturn the 2020 election in Georgia. He was booked at a regional jail last night under state charges, and authorities have confirmed that Trump was fingerprinted and a booking photo has already been taken. Meantime, a major development in fast fashion competitors Shein and Forever 21, they've actually joined forces. The retailers have announced that they will bring together 2 brands that have a strong following of young shoppers and a reputation for trendy clothing and accessories at a low price. And breaking all records, it's Barbie that's become this year's box office champ in just a little more than a month in the US. It topped the Super Mario Brothers movie to become the highest grossing film in the United States for the year 2023. And guys, in just 1 month. And moving on, all you cricket crazy fans, starting from today, Book My Show is the official ticketing platform for the ICC Men's Cricket World Cup 2023. They're going to be selling the tickets. The tournament is going to feature a total of 58 matches, remember, including 10 warm-up fixtures, and that will be hosted across 12 prominent venues throughout India. And staying with sport, India's chess prodigy R. Pragna has lost to Magnus Carlsen in a thriller final match of FIDE Chess World Cup. And this comes after 4 games of chess, which lasted 3 days, and that finally came to an end. Carlsen has won his first Chess World Cup title. And on the bright side, Pragna has become the youngest player to reach the Chess World Cup final. He's also the second Indian to achieve this position after, of course, Grandmaster Vishwanathan Anand.
Financials, another circuit. Yes, sir. Another circuit down. So that is 5 circuits now for Jio Financials. 260 has become 200. Hemang, Jani, at what point in time you would say I'll go against the crowd? I'll buy Jio Financials. Hemang is not there, but Sharad is ready, and we can go to Sharad to understand that what the khabar on D Street today is.
Well, yes, in focus we are having Man Infra, and what we are hearing from the street is Samco Mutual Fund has acquired 20 lakh shares over the last 1 week, and over the last 2 trading sessions also, as per the exchanges, the promoters have acquired stake in the company of almost 1.25 lakh shares. Apart from this, also recently the company had acquired a real estate development company as well. Now, of course, what we are hearing from the channel checks is marquee HNI investors' interest is also coming for the stock. The stock itself has doubled from March lows itself, and also the important thing is the key investors already invested in the company include the names of Quant Mutual Fund, Rekha Rakesh Jhunjhunwala, and even French FI Societe Generale. Apart from this, also the important thing is that the Q1 update had come, and it was a very strong Q1 update with the real estate having a portfolio of roughly 46 lakh square feet, and also importantly they serve clients such as Godrej Properties, Adani Realty, and even Suntec Realty, and it's expected that the pre-launch sales are going to be very strong in the MMR region. Apart from this, in the EPC segment of the business also, the company is having a roughly order book of almost 1265 crore rupees.
So keep an eye. Thanks very much, Sharad. Let's keep an eye on Man Infra. Let's move right on then and take a look and recap the stock on the editor's radar. Today, it was Power Grid.
Why has Power Grid popped up on our radar? We're taking a leap from the Morgan Stanley report. Let's start with that. And Morgan Stanley has overweight on it. Now, a stock like Power Grid typically does well when the market are moving towards a defensive bias, and I will not be surprised given the levels and the valuation setup and the global setup that it makes sense to have some defensive exposure to your portfolio. See, simply looking at the Power Grid, and we all know that the entire space in the power sector is charged up right now, starting from transmission to utilities to capex providers. Just about everything in the power space is on a high voltage right now. I think Power Grid has underperformed. The construct of the lay of the land for Power Grid is quite supportive, given that the nodal agencies right now are looking at increasing the transmission capacity. So the big picture argument is strong. Valuations are attractive. Price to book is reasonable. The stock has underperformed, and I somehow feel, and I would like to endorse what Morgan Stanley seems to be indicating, that this entire power regulatory tariff, which is just a draft paper right now, Markets feel that if implemented, it will have negative implications for the transmission companies. But as of now, that's just a discussion paper. Nothing has come out of it. So put all these factors together, and then you say that if everything in the power space is up, and if the tiny toons are right now doing Kathak and Bhangra, then why power? Yeah, I mean, it's like it is a defensive stock. You look at just about everything in the power space, especially the transmission space, is just on a different kind of tear. I think Power Grid is an institutional dominated stock, reasonable valuation, good big picture. The fear of this regulatory change, I think, is overdone. I will not be surprised that the stock from here starts outperforming for the rest of the year.
Right. Okay. Let's tell you what the index calls as well are this morning, in which way the consensus, if there is a consensus, is headed. So let's pick it up from Kunal, Nooresh, as well as Santosh Meena. It's a sell from Kunal, it's a sell from Santosh, but a hold from Nooresh on the Nifty this morning. So the moodometer is pretty much tilted towards the sell side. That's a red indicator for the Nifty. For the Nifty Bank as well, it's a similar scenario. Kunal is recommending shorting it. Santosh as well recommends selling it. And Nooresh saying hold on to it. So the market moodometer for the first time in I think many days is now tilting towards sell from the erstwhile hold.
Sell. Don't wait for uptick, but just go and sell at 9.15.
Yeah.
And would you be looking at a sizable commitment?
Yes.
Okay. So would you also say that this is the first time in this rally of summer 2023, the downside is looking very pronounced?
I'm not saying it's looking very pronounced, but it's looking very. It's looking as a very high probability trade over here. So I'm not expecting like a 500, 700, or 1,000 point correction on the Nifty. Maybe another 400 points on the downside, 19,000, 18,900 is where I would expect that the move settles in. So actually the calculation comes from 1,000 points on the Bank Nifty. So we try and replicate that to maybe 380, 400 points on the Nifty. That's where we tend to believe that the market should settle into. So yes, the probability is pretty high. The markets have given a lot of confirmation. So taking a trade would be a better strategy over here.
ATM block deal is over, and after the block deal, the stock's up. Now, even though the 3% supply has come in, 3% is a sizable supply for a stock like Paytm, but the fact that they're buyers standing on the other side, beginning of the year, this is not once upon a time, not even 10 months, beginning of the year, about 8 months ago, just in and around budget, nobody wanted to buy Paytm. I mean, the anchors investors were selling and smashing the stock down. Now the same exit because market conditions have changed, Nasdaq's made a comeback, interest rates have stabilized, sentiment has changed. Markets are about sentiment, folks, don't I always say that? What was looking like a trash may suddenly start looking like gold. That's how market sentiment actually swings. Paytm at the beginning of the year, can you look at the 1-year chart please? And you will actually see that how it had collapsed in the month of Jan because of the selling which had intensified. And sometimes our charts also get jammed because there is so much of up and down which has happened in the Paytm stock. There you go.
I mean, why Paytm? Look at Zomato. I mean, literally it's moved in correlation with tomato prices, right? From $40 where Zomato was.
But tomato prices are down.
Tomato prices are down, but from 150, they're still, escalated, and Zomato's also around 100.
See, Aisha, that's what markets are. What we must understand is that there is something called a pendulum effect which happens in the market. And pendulum effect is 2022, by the way, Paytm is nowhere close to its IPO price, and Zomato is just above its IPO price. It's nowhere close to its all-time high. It was the euphoric positioning which happened in 2022 where everyone thought that, okay, these are the go-to businesses, and market just ignored the valuations. The promoters thought that, okay, this is a new business, and if P investors are valuing them at X, so auction market will value them at X plus Y. That is where I think things changed. Auction market and P markets are different. Then interest rates, they went higher. Then there was this whole compulsion, funds had to sell because their redemptions, markdowns were happening. And then the true value which some of these businesses had to offer, that got completely negated and completely ignored. And that is where I guess the smart guys moved in, and that's what markets are. I mean, for example, at the beginning of the year, Adani group of stocks in terms of P multiples, they were trading way above what the historical averages for the sector are. Then came that selling, and the smart guys who bought in that panic, now they're saying that, okay, we really had a foresight to buy these stocks when there is peak of panic. Like Buffett always says, keep it simple. Buy fear, sell greed. Buy fear, sell greed. Right now, I think I'm not using the word greed, but there is definitely a tinge of overcommitment in defense. There's definitely a tinge of overcommitment in railways. There's definitely a tinge of some of the stocks Kunal was also discussing. So it's now a matter of time that either those stocks will move into time-based correction or a price-wise correction is around the corner. That's what markets are. I mean, there's nothing unusual about it. We've seen so many cycles. Banks, I mean, everybody thought that it's your out-of-jail card. And now banks have done nothing. It became a consensus.
And kind of over-ownership as well in banks.
FIs have come, but they've not bought HDFC Bank.
Yeah.
I mean, it's like supposed to be the darling stock.
Yeah, what an underperformer it's been. Kunal, you want to add to that in terms of, chart trends on some of these large cap financials?
Yeah, I think private sector banks have underperformed. That's been the decisive trend of 2023 so far, this rally for last 5-6 months. And, the PSU banks have managed to compensate or managed to fill up that gap which has been because of the private sector banks, and that's a decisive trend. Not sure that whether this is a long-lasting trend that the private sector banks can keep on underperforming, but yes, these stocks have been under selling pressure, so we'll have to wait for some time, let these stocks show signs of outperformance, then maybe jump into it.
30 seconds to go, last trading day of the month, and it's a day where you would say that the bulls really are on a back foot. I wouldn't say the bears are on the front foot, but the bulls are on the back foot. You may actually see a little bit of give and take, which actually is happening on the index. Yesterday's second half was not that great. I mean, Reliance came down, HDFC Bank came down. You got to ask yourself that if these two stocks are not participating, I mean, an elephant will dance, but it's not going to dance today, that I can tell you. And Reliance, despite that Reliance retail deal, actually had its day off. So buy the news and sell the rumor. That turned out to be the case for it. But Jio Financial Services still locked down. That's the important one for us to mark. Paytm block deal is over, and now the first rate on the Sensex and the Nifty, they've started kicking in. It is not a scary start. 0.5% is not scary, but in the context of where it was in terms of the market positioning, it's a downtick. I think is clearly visible in the way how the market breadth and how the Nifty also seems to be moving. So for me, I think it's important to establish that the market breadth, for the first time after many days, is looking meaningfully weak. It is looking meaningfully weak in terms of the total composition. So it's a lot of red on the screen, and I think markets will have to deal with weak open today, and then you got to take it from there. Where is the bank Nifty? Down. Small cap index down. Mid cap index down. And there is definitely a global headwind which is having impact on the market per se.
Yeah, absolutely. Couple of other names which are going to be in focus. Paytm, let's see where the stock price has settled in at after that Anfin block deal which just happened. Stake worth about 2,000 crore rupees at a floor price of 880, 922 on that stock, and that's a big move, about 2% is what you're seeing. There's Amber Enterprises as well, wherein the PE firm Ascent is likely to sell that 4% stake worth about 380 odd crore rupees, 3.5% higher for Amber as well. Birla Soft, wherein Nomura has initiated a buy with the target price of 610. The Sirma SGS as well, long-term aspirations of $1 billion revenue is what the management has indicated in their management meet, and appointed a new CEO as well over there. Also, there's Bharat Electronics as well as other defense stocks as well. Remember, the Defense Ministry has approved proposals worth about 7,800 crore rupees. I mean, as much as you may think that there is exuberance in this sector, but the news flow as well continues to chug along the positive line. There's Shoppers Stop as well, wherein the CEO, Venugopal Nair, has resigned with effect from August 31st. Of course, they have a new CEO in place. Let's see how that stock has been reacting. Gap down 6% lower for Shoppers Stop as we speak right now. Couple of other reports as well. Aurobindo Pharma and the Times of India has reported this morning that promoters have restarted injectables business stake sale process. That stock holding higher by about almost 0.5% or so. There's Manappuram as well, wherein Kunal has sold about 8.3 crore shares. Domestic mutual funds have been buyers. So that's one another stock in focus. There's Max Financial as well, wherein the promoter Max Ventures sold over 1 crore shares. Mutual funds have been buyers. RBL Bank, CDC Group has sold about almost 99.5 lakh shares via block deals. So a lot of block deal related stocks which are in focus as well. And then of course, there's Indiabulls Housing as well, which we understand they've repaid that over 2,200 crore rupees to ANZ Banking Group and Barclays Bank PLC as well as SBI. That stock holding up almost 2% as we speak right now. You've got the telecom subscriber data as well for Reliance, for Bharti. It's been net additions, and of course continues to be a loss for Vodafone Idea. Although Reliance continues to be under pressure, down another 1% in trade right now. And since we're talking about Reliance, let's see what Jio Financial Services is up to and whether it continues to be locked in lower circuit or not. That stock will just come up for you on your screens. Yes, once again, 5% down, take 202 on that stock right now. But significant pressure on the index as well, Kunal. What are the first trades you're punching in?
Yeah, so for the, I think from the index point of view, there is definite amount of weakness. We've managed to, ebb back on the premium for the indices. So again, that's a critical sign for the index, especially going into the expiry week next week. In terms of opening trade, Nifty is something which I would look to sell in the open. That's something which we discussed earlier. That's a strategy which I'll take at the opening hour of the index.
All right, Nooresh, let's get in a sense as to what you're making of the market open this morning and what's the first trade that you'll be punching in.
So on the Nifty, we are seeing a gap down. We are seeing a flat open on the small cap index as well. So the trend continues wherein index remains under pressure, broader markets not in a similar pressure. The stock I would be looking out to buy would be IndusInd Bank closer to 1400 levels or at about 1435. That's the stock which is showing leadership out here that could break out over the short term. So it would be IndusInd Bank on dips or on the breakout.